What's going on? Alex here, and today I'm going to show you how to take the raw transaction information exported from your bank and turn it into a financial statement that you can use to file your income tax returns. Now, a few disclaimers before we get into it. First of all, even though I'm going to show you how to do it yourself, I don't recommend it. The reason being, there are many nuances that come into tax preparation that would involve a higher level of knowledge and skill to actually take the numbers from your bank account and turn them into information you can use to file your tax returns. There are some depreciation considerations and so forth. So you don't want to just take the information in this video, throw it onto a tax return, because remember, you are filing tax returns under penalty of perjury. So it's very important that you get it right. So in using any of the information in this video, you do so at your own risk and you take full responsibility for that. The information in this video is specifically going to be geared for Schedule C filers or self-employed individuals. This does not necessarily apply for owners of C Corps, S Corps, partnerships, what have you, because those entities tend to be a bit more involved in the accounting, a bit more complex. But Schedule C is pretty straightforward, so I'm going to show you how to take the CSV or Excel information that your bank provides and turn it into information you can use to file your tax return. So if you're a contractor, you're a Schedule C filer, you're a sole proprietor, this video is for you. And with all that out of the way, let's get started. I'm going to show you step by step how I go through all these transactions in a quick and efficient manner and organize this information in a way that can be used to file a tax return. And very often for our clients that don't have a bookkeeping or accounting system in place, they're not using QuickBooks, Xero, or some other system, this is the way that we get the information, and we have to build the financial statements from what we have. And often you'll see that this information comes through just like this. There's going to be a few columns that are available, and there's not much other information that we have at the moment. It's going to be the date, it's going to be the transaction amount, and the description that comes from the bank. And this is very important for use in organizing all of this information. Now you might be looking at this and saying, oh my God, Alex, there's so much to go through. This will take forever. It's not going to be efficient. We're going to have to go through this one by one. And that's just not the case, because we're going to use the power of Excel to organize this information, sort, filter, all that good stuff to get to the meat of it and not have to take a whole year doing it. Now, with that, a few considerations. Obviously, I'm going to be using Excel to work through this information, but if you don't have Excel, you can also use an open source solution such as Open Office, something like that, that is free, but still provides the functionality that we're going to go over. And in going through this, I'm going to try to outline all of the shortcuts that I'm using. Even though I've been doing this for years, it's kind of automatic for me at this point, but I will try to make sure that every step that I take, I fully explain for you guys and gals. Alrighty, so first step here is we're going to just organize this information a little bit. So we want to put the company name up here so we know what we're talking about. Now, this could be a single member LLC. This could be just a DBA or doing business as, and this would have just one owner. If you have more than one owner for a business, let's say an LLC, then you have a partnership, so be careful there. Now we're going to do a tax analysis. All right. And we're going to do tax year 2022, just so our spreadsheet looks nice and organized. Now, going down to the information, we see that there's about 500 rows here that we have to work with. And the other thing is that these numbers here are generated randomly. So some of them might look a little strange. It's because we couldn't take somebody's actual bank statement and show it to you guys, right? There's so much personal identifiable information there. I just generated this file to use as an example. So it's not going to be hyper realistic, but should give you the idea. All right, now that we've labeled our spreadsheet, the next step is to get all this information organized, all right? And the first separation of the information that we're gonna put into place is separating the positive amounts, meaning the cash inflows, and the negative amounts being the cash outflows. And Excel allows us to do this really efficiently. So what I'm gonna do here is, first of all, we want these numbers to be displayed in a bit of a different format. So we're going to highlight all of these numbers. And the way I did that was I clicked this first one, Control, Shift, and the down arrow takes us all the way down to the bottom. And I'm going to hit this comma icon right here. And you'll see that it just changes the format of the text, makes it so that there are 2 decimal points and so forth. So it looks nice and organized like a dollar amount should. Now, the next step is to highlight all of these rows. All right, just drag across all the rows there. And what we want to do is sort this information. So we go to Data and Sort. And what we want to do is have the highest amounts showing at the top, and then we want them to get progressively lower as we get down to the next row. So as we see here, the amounts are in column B. We have my data has headers unchecked. I like to do that just to keep things clean. So we're looking at column B, and we want the amounts sorted from largest to smallest. And once we do that, we notice that we have all the positive amounts at the top and all the negative amounts at the bottom. What is the significance of that? Well, now we've effectively separated the cash inflows from the cash outflows. And notice I'm not using the terms income and expense over here because we haven't even gotten that far yet. We just want to know what came in versus what went out. And we're creating a separation between the two so we can work with this information more easily. All right. So now we want to label this information here as cash inflows. All right. Just makes things a bit nicer. If you have nice spreadsheets, guys, it's just going to make your life a lot easier. That's my advice. All right. And then down here, we'll label this cash outflows. All righty. The next step that I like to take when going through information like this is actually to sort this again, but I want the biggest outflows at the top and then the smallest at the bottom, because you see we're starting off with these small fries here. We want to take a look at the big ticket items first and then work our way down from there. So we're going to actually reverse the sorting on the outflow side. And again, we highlight all the rows, we go to Data, Sort. We have my data has headers unchecked. The column is B, and now we want actually smallest to largest. All right, just like that. Okay, and now you can see the big cash outflows are right at the top, and then they get smaller as we go down. That just makes the information that much easier to work with. Okay, all right, going back to the inflow section, now we start to look at the descriptions of these transactions, and we can even dress this up a little bit. So we have date, we have the amount, we have the description from the bank, and now we're going to classify these transactions because at the end of the day, we want to group them together to then report these amounts on the tax return. So we have classification. Okay. All righty. We're going to center all of these, make them nice. Looking at these descriptions, we do want to take into account what the amounts are and where they're coming from. What we see here is that a lot of these amounts are not round numbers, but we do have a few here that are actually round numbers. So this 20,000 check deposit, you'd have to look into where that came from, what the origin of that transaction is, but this looks like an owner contribution, which means that the owner took an amount out of their own personal bank account, let's say, and they moved it into the business account, which is not income, it's not taxable, and that's why we want to separate those contributions from any income that came in, because the income is taxable, contributions not taxable, and we want to take those into account separately. Similarly, we have a transfer of $5,000. All right, so we had a $20,000 check. We could also look at the check itself, which is exportable from the bank system, and we can just make sure that is indeed an owner contribution. Then we have a $5,000 transfer. Again, the round number, so it's very likely that that might be an owner contribution, but that could also be income. So you have to check out what exactly transpired on the 1st of January 2022. And if the business just started right around that point, it's very likely that is another owner contribution. Now, aside from that, you'll see that we have some repeating transactions here, and there are a lot of them. So we obviously want to save time. We don't want to go through this one by one. And here is where the filter functionality of Excel is super useful. So what we want to do is highlight these column headers here. We want to go to data and hit filter. And once you do that, you'll notice that these boxes appear here that will allow us to filter out the information. Now, with filtering, you have to be careful because it'll only work essentially while you have rows that are filled in one after the other. If you have any blank rows, then the filtering will fall apart and it won't take into account any information after the blank row. So in using filtering, you want to make sure that you don't have any blank rows in the information. And here we can see that we don't have any blank rows in terms of the cash inflow side of things. All right. Now, looking through here, we want to see some common descriptions. Now, it may be part of a description. You may have count numbers, transaction numbers, and so forth. It may be a lot of information there, but you want to take a look at some commonalities here so that you can filter out the information effectively. All right, so I'm seeing cash deposits. So what we do here is go to the filter icon, go to text filters, and then we hit contains. All right, here we put cash deposit because that is one of the labels here that we're seeing. And look what happens. All right, we're filtering out all of the other transactions, and you can see that these row labels are now blue, showing you that some of them are hidden while the others are visible. So we're seeing all of these cash deposit amounts. All right, and all we have to do is determine what that cash deposit amount is. It could be income, it could be something else, but in this situation, we're going to assume that it's revenue. All right, and once we classify that first one, what we want to do is grab this little box at the bottom right of the cell and drag it all the way down to the end of this list. All right, and Excel will even slow you down once you get to the end. And once you get to the end, just release the mouse button and you'll see that now all of these are labeled as revenue. That's a lot of items taken care of very quickly. Now, if we go back to the filter icon here and we hit clear filter from description, you'll see that every cash deposit item now has the revenue classification associated with it, okay? So instead of going one by one and going crazy trying to classify all these different transactions, we see here that we've done a lot of the work by using the strengths and tools that Excel offers. Okay, next one, we see that there are some PayPal amounts here, all right? And similarly, we go to description, text filters, contains. Let's just put in PayPal, all right? And we can see that PayPal amounts are received throughout the year. And as a business owner, you should know whether this is income, whether this is revenue for services or goods that you're selling. And if so, it's also going to be classified as revenue. Again, same procedure. We grab this box here, we drag it down to the bottom, and now all these transactions are revenue. All right, as you could see, now a lot of the work is already done for us in terms of classification. I'm also seeing QuickBooks Merchant Services. So let's go back up and go to text filters, contains, QuickBooks. All right, and we see a lot of items here. You should know if you have a QuickBooks Merchant account and if you're taking customer payments with that. And if so, then that is very likely to be revenue as well. All right, clear the filters. Okay, and a lot of this is already filled in for us, so that's looking good. Now, we have these merchant services / payment amounts. Let's finish this off here. Go to text filters, contains, merchant services. All right, and you can see here that there are some descriptions here that are pretty much double. So merchant services appears in both. But what we want is just merchant services, not QuickBooks. So how would we go about that? Now, let's search for it a different way. And this is good because you're seeing the different variations that you may come across and how to approach them. So we're going back to description. We're going to text filters. Now we want to hit begins with. all right? Because now it's saying this is the text at the beginning of the description that I want you to take into account. So now we can see that we're only looking at those merchant services payments, not the QuickBooks payments that came in. And again, we want to outline this as revenue, assuming that's payment for goods or services received from customers. All right, clearing that out. And you guys are seeing the play-by-play here. This is exactly how we approach this. We see some Stripe payments as well. Let's go for that. All right, and this will be the last one that we do on the revenue side. Okay, so we have Stripe payments that are received. Again, if that's one of the merchant services providers that you use, then this would very likely be revenue as well. Alrighty, so I think you get the idea there. Pretty much filter, drag and drop, and you're classifying transactions. We have a few here that we didn't classify yet. You have to take into account, oh, here's another transfer. So now this is right at the beginning of the year, $3,000 transfer. It's a round number. It very likely may be an owner contribution as opposed to revenue. So we're going to classify it that way. Okay. And as we go through here, we see that we've pretty much done all the work and there are no missing items. Alrighty. Now what we can even do is sort these rows by the label in column D, which is the classification. So we've highlighted all of the rows. We go back to the top and we hit data, sort. Again, my data has headers is unchecked. We want to sort by column D, and usually A to Z sorting works just fine. All right. What that did was group together all of those different classifications that we had input. So you have the owner contributions at the top, and then everything else here should be revenue. Obviously, you want to check the description to the classification, make sure it makes sense. But what we want to do here is create some additional space, go back up, take these owner contributions. I like to separate them out just so we have the revenue all by itself. It's nice and clean, and we don't have to worry about double counting or missing items. So with that, we'll just drag this all the way down and leave it as its own category. But now what we have is essentially a very clean revenue section. All right, so we delete these extra rows, and as we go through here, every single item is revenue. And while we're here, I'm also going to switch over the column. All right, so column B, I'd like it to be in column D to the right of the descriptions. So what I'm going to do is just drag and drop. All right, and now we can delete column B because we don't really need it, or we can leave it just to add a little bit of space. It's up to you. All right, for me, I like it to have a little space there, and it looks like we should be able to add up the revenue and know what that line item looks like. All right, let's just make sure. So we have it all classified. Everything is revenue going down the list. All righty, and now we can go to the bottom here. Typically, we add a little line to show that we're doing a sum or total. And now there's an Excel shortcut. It's holding the Alt button and hitting the equal sign, which will sum up all of the information, assuming there's no break, there's no blank rows there. And as you can see, we're adding up all the amounts. Nothing is missing. It's all revenue, nice and clean. And we hit enter, and now we get a revenue number. Okay. Obviously, you want to make sure that that's reasonable. It's compared to your expectations. It's not wildly off of what you thought you earned throughout the year, because again, some of these items may need to be reclassified. So you don't want to just blindly do this. You want to do it carefully, because at the end of the day, this is the income number minus expenses equals taxable income in many cases, right? So you don't want to pay more taxes than you would be subject to under the law. All right. Now, we're going to keep these owner contribution numbers just hanging out here for the moment. The most important thing in terms of Schedule C is that we don't include them as revenue. They're inflows, they're cash inflows, but they're not revenue, they're not income. And that's why we want to separate them out. Now, ideally, with accounting and bookkeeping, even for a Schedule C filer, for a sole proprietor, for an individual with a business doing a DBA, you do want to track your balance sheet, all right, which is an accounting topic. It's a little bit beyond the scope of this video, but you want the balance sheet and income statement taken care of. That's a bit more advanced that we're going to get into. We're just looking at the income statement for now. Okay, we got the revenue sorted. Now we're going to take a look at the cash outflows and the expenses. And this is where a lot of clients get in trouble because they take into account personal expenses. They don't properly allocate things, especially the real estate owners out there. You guys do a major renovation for $150,000 and then throw it all on Schedule E as a deduction in year one. Big mistake, right? You're begging for an audit if you do that. And that's why I said at the very beginning that you're doing this at your own risk. And while I will teach you how to do it yourself, I don't advise getting an accounting professional to at least review this information before you just slap it onto a tax return, all right? And before we get into the cash outflows, if you're hanging out, enjoying this video, smash that like button, okay? Just jackhammer that like button if you would. It helps the channel. And subscribe to the channel if you haven't already. We'd love to have you. And it's free. Okay, so looking at the cash outflows, we pretty much want to do the same procedure that we did with the inflows and determine what is an expense and what isn't, and categorize things accordingly. Now we're starting off with a large dollar amount. It's round number and it's a transfer. So this can very likely be an owner distribution, which is not an expense. We don't get to deduct it. And that's why it's important that we label it as such so we don't throw it on Schedule C and take a deduction when we're not eligible for one. All right. And similarly with this withdrawal amount here, and again, we sorted these amounts by magnitude. So we have the most negative outflows at the top and the least negative at the bottom. So the big ticket items come first. Now with the withdrawal, we have another $10,000. This was on 10/9/2022. You have to determine what the nature of that was. It could be an expense, but in this case, looks like an owner distribution just because it's a big round number. Now we have a similar situation in that we have all of these different descriptions and we need to efficiently go through and classify all of these amounts. So what we're going to do is turn off the filter for now and just copy these column headings to make things nice and clean, guys. A nice clean spreadsheet is next to godliness. Have you heard this before? Now, what we want to do is apply the filters to the cash outflows, okay? And we see here that there are some descriptions that we can use to make things a bit more efficient for ourselves, all right? And specifically, we have AMZN purchase. Looks like Amazon. We have one here. We have one here. So what we're going to do is go to description, text filters, contains AMZN. All right. And all of the Amazon purchases are right there. Now, these are fairly significant. If you add them all together, we're looking at $35,000. This is where you have to be careful because if those constituted equipment purchases, then some of those you may have to capitalize. Some of those you may be able to deduct all in 1 year. It's all a matter of understanding what the nature of the purchases were and so forth. And depreciation is a whole nother subject in and of itself. So in this case, what we're going to do is mark this as equipment purchase. But again, that doesn't necessarily mean you could just throw it on Schedule C and deduct it. You may have to depreciate it over time. And you have to investigate pretty much the amount of what you were purchasing and whether it was multiple purchases that add up to one piece of equipment or everything was separate. So a lot of analysis actually goes into this. And if a client showed us that they purchased $35,000 worth of goods from Amazon, we certainly need to dig into it and find out exactly how to treat that from an income tax perspective. All right, now we clear the filter and now we notice there are some contractor expenses. All right, so now we go back to that filter and we enter the contractor expenses. So these are typically amounts you pay to an outside third party that provides services to your business, for your business. All right, so we would label this as outside services. Okay. All right, and you might be asking where are these descriptions coming from, which is a great question. if you look at Schedule C, it will serve as a pretty good guide as to what these categories are from an income tax perspective. So once we have Schedule C pulled up, you'll see that it includes all these categories right there for you, and it reduces the amount of guesswork. And what we're doing is essentially using the expenses here. Some of the general categories are usually helpful in terms of how to classify those expenses. And a lot of the labels you see that I'm going to use to classify expenses come from Schedule C. This is not an all-inclusive, all-encompassing list, but serves as a decent guide just to get you on the right track, right? There's advertising, commissions and fees. There's contract labor. This is where we typically put outside services that I just described. We have insurance expenses other than health. So if you have some sort of liability insurance, that's where you'd put that. Legal and professional services. Those are the general categories that you'd want to stick to. You don't want to get too exotic in terms of your categorization, but if you did want to use other descriptions, you do have line 27A, which is labeled other expenses, and it comes from line 48, which is right here. So you see other expenses. You can be as creative as you want. I don't advise you to be too creative, but here's where you put descriptions of expenses that are not available at the top on Schedule C on the first page. All right. So sticking to these descriptions should be a good guide for you. Not all encompassing, not all inclusive. All right. But these would be outside services. Let's clear this filter. What else do we have? We have accounting fees, because the accounting guys, they have to charge you an arm and a leg. You know how it goes. All right, we put in accounting. We see there's a bunch of accounting fees. This is probably a pretty good client for this account. $15,000, not bad. All right, so accounting expenses, put that in there. We drag and drop. You guys know the procedure, okay? All right, let's do a few more just so you guys get an idea. Now, looking through here, we see Office Depot purchase. I'm seeing a few of those. Again, we're going to use Excel to make this quick and efficient. Ooh, we're good customers of Office Depot. Again, just as with the Amazon purchases, if we have purchases of $54,000 from Office Depot, we want to know exactly what was being purchased so we know how to treat that. You don't just dump it on Schedule C as an expense necessarily, but let's say these are equipment purchases. All right. Again, more work to do when you have any sort of acquisitions of equipment, machinery, property, buy a factory, anything like that. We have to look into it a bit more closely just to see how we can treat it. But at the moment, that's the best information we have, and we're going to keep on trucking. I see some payroll payments / wages. So let's take a look. Let's filter by that label, and we see that we have some payroll payments. So quite simply, we would label this as wages expense. All right. And looking back on Schedule C, the wage expenses that we're calculating here would end up on line 26. All righty. Now, keep on going. Let's see what else there is in terms of the wages, because remember, if you are paying payroll, there's probably employer payroll taxes. So we see employer taxes. Let's sort. All righty. Okay, that's the label. And now we see some employer taxes. Again, that's a deduction for businesses. So we want to label it accordingly. So employer portion payroll taxes. All right, make that a little bigger. Make that bold because we want to be consistent, and we drag and drop. Don't forget that last line. Okay, let's go back. And as you can see, we're pretty much filling in all of these different expenses, and we're doing so extremely quickly, all right? It's not taking us long. We're breezing through it. Let's keep on trucking to give you guys just some examples of what you could come across. Now, I see website hosting, so let's go ahead and address those items. All right. And it contains website hosting. All right, a lot of items here. This is some expensive website hosting. All right, and there's some subjectivity with regard to how to classify this, but this could be advertising or marketing expenses, website expenses, what have you. Different tax professionals will classify differently, but let's just call it advertising expenses for now. Google Ads expenses. So this is certainly advertising. All right, let's classify that. All right, and as you're watching, guys, if you're hanging out, like the video, subscribe to the channel, leave some comments. Getting some interesting comments. Somebody just broke the like button. Thank you so much. I appreciate it. Definitely just destroy it, will you? Thank you so much. All right. Now, we got some more advertising expenses. Look, Excel's so smart, it's even filling in the description for you. All right. Okay, what is missing here? See, now it's just a matter of addressing these open items. Insurance premium payment. Okay. Obviously, that might have the name of your insurance company on it and so forth, a bit more descriptive. But here we want insurance. All right. And insurance is an expense, just like many other things for a business. So insurance expenses. Okay. And I showed you that line item on Schedule C. It's right here. Insurance other than health. So assuming this is liability insurance, something like that. Okay. And now we have QuickBooks software fees. All right. So let's search by software fees. Okay. All right. And QuickBooks is pretty expensive. As you can tell, again, these numbers are randomly generated, but it does add up after a while. So the classification that we can use here is software expenses. And on Schedule C, where it'd probably report that is as part of the other expenses on line 48. So we'd have software expenses here and the amount, which does make its way back here on Schedule C on line 27A. All right, so software expenses, bam. All right, what is missing? Or did we, oh, we have some missing ones here. We have Facebook ads. All right, so let's filter this out. Take care of those bad boys. All right, just a few. Now this is gonna be advertising expenses as well. And as you can see, I'm trying to keep the labels relatively similar. I'll show you why in a second, but it's going to help in terms of rounding out all of this information here for us. All right, we'll clear that bad boy again. And it looks like we're at the point where we took care of all of the cash outflows. Again, not yet expenses necessarily, but cash outflows. All right, and you can see that all of these are filled in. So we are looking good. The next step is to, you may have guessed it, sort by classification. So column E, we want to basically sort this alphabetically to group the similar classifications. All right, so we're going to sort by column E, okay? And this is going to be by values, and A to Z is just fine. Now we hit OK, and you can see now that out of all of the cash outflows, we have everything grouped together. So we have a bunch of accounting expenses, advertising expenses. As long as it is an expense, it belongs here because it should be deductible. Again, caveat there is that you have to know what you're doing in terms of taking deductions versus capitalizing and depreciating them. That's where an expert can come in and help you in terms of applying this to a tax return. But in very general terms, we want to just know that there's nothing on here that is specifically not an expense. So we have these owner distributions that we talked about. We want to get those out of here because they're not deductible. They will not reduce our taxable income. So we want to throw them down here. Let's get rid of these blank rows and keep on looking. All right, so we have here a pretty good example of all of the transactions being classified. And now the question is, how do we get the totals? Now, there are a few different approaches here. The painful approach is to add some spaces here and then add a total under each item, which will take a long time and it's not really the most efficient way to go. So I'm going to show you a better way to do it. Since we have these different categories, we can use a function in Excel called Subtotal to make sure that this is done for us very efficiently and easily. All right, so the way you do that is that, first of all, we're going to get rid of the filter here for now. All right, And what we want is subtotal. So I'm going to highlight all of these headings, and then I'm going to hit Control, Shift, and the down arrow. And that should take into account all of the line items there. Now, let's just scroll this back up. All right. And we're going to go to Subtotal Function here, which is right over to the right on the Data tab. So once you hit Subtotal, it says Excel cannot determine which row in your list contains column labels. If you want the first row of the selection or list used as labels, not as data, click OK. The reason we want to do that is because we've already put in these column headings and they're not part of the data, which is exactly what we want. We hit OK, and now this screen pops up. All right, and at each change in the classification, we want to use the function sum. All right, we want to add all those amounts together, and I'll show you the result of this and why this is so good. And we'll add the subtotal to the amount, all right, because we want to add all of that together. And all these other options are okay as they are. And once you've had this set up accordingly, hit OK. And you'll see that you have these numbers here to the left. And you'll see that there are some totals here that have popped up that are basically taking every change in the description here in the classification column and adding all of those together. So if you highlight, just to check this out, if you highlight all the advertising expenses, we have a sum of $49,610.81, which is exactly what we have here. So Excel has basically taken each change in the classification and added together all those expense items for us to create essentially what a Schedule C might look like. Again, you have to have an expert double check this for you if you don't know your way around depreciation and taxes, but this is a good starting point. Now, as you hit these different levels here, you'll see that it gives you different amounts of information. 3 gives you basically all of the information with the totals. But if you hit this 2 icon over here, then you'll see that it combines all those different expense amounts into just the totals. All right. So accounting expenses are $15,071, advertising $49,610, employer portion of payroll taxes $19,945, so on and so forth. And with that, you can essentially see how we put together the income side, being the revenue in this case, which we would populate right here in the income section of Schedule C. And typically we would include those amounts on line 1. All right. And on top of that, we also worked on the expenses. We classified every single expense line item. We took out the items that aren't necessarily expenses. They were owner distributions. They're not deductible. And now we have these clean amounts that we can use to incorporate into tax preparation. Now, of course, you'd have to repeat this for every bank account, every credit card that the business uses and so forth, which can be extremely time consuming, as you can see. Even if we do it efficiently, if a business has 15 bank accounts and 22 credit cards, this can take quite a while, and we have to bill for that time accordingly. But this is a way to filter through this information extremely quickly, get down to what you need to focus on in terms of additional information that you might need to gather, and put it together using the power of Excel. Makes it really efficient and gets you that much closer to being able to file a tax return. All right. A few other considerations. If there are personal expenses, you have to allocate those accordingly and make sure that you don't deduct any personal items. The other thing is that if you commingle your personal and business bank accounts, if they're personal transactions or business transactions, then you have a lot more work to do in terms of making sure that you're only deducting business related items on Schedule C. And hopefully this serves as a nice blueprint in terms of how to take your raw banking information and turn it into information you can use to file a tax return. This is not going to account for every single situation, but hopefully this helps, especially if you have multiple years to catch up on and get up to date. All right. Now, with that said, Efros Financial offers accounting and bookkeeping services, especially cleanup of messy books over years. So if you've been procrastinating for multiple years and you have unfiled tax returns, we can help you get everything current and keep you current moving forward. It's another thing that you will not have to bother with as a business owner. You have enough on your plate, and we'll take care of the books and make sure it's done right the first time. All right. So if you guys have questions or if you want help with your particular situation, here's the phone number down below. We'll also include the contact information in the description of this video so you guys can get in touch and see how we can help you get back on track. Obviously, if you have a system like QuickBooks or Xero in place, then this may not be applicable to you, but there are a lot of business owners that we find that come to us that need their books done, and we have to go from the bank statement level and go up from there. The last thing I'd say is you still need to keep your receipts. Using bank information doesn't give you all of the detail that you need to substantiate an expense from an income tax perspective. You still need those receipts. The credit card transactions, the bank account transactions are not enough. And if the IRS or another taxing authority were to look into your tax return, they may disallow transactions simply because you do not have the proper substantiation. So receipts are king. All right. And Amazon and other retailers make it really easy to download all that information, throw it in a file, and make sure you have it just in case. With that said, thank you guys for watching. I appreciate you. Hopefully this was helpful. Subscribe to the channel if you haven't already. Hit that like button and leave your comments down below because I love reading your comments. And as always, hopefully this video changed your life. Thanks for watching.